The markets are right. Inflation is everything. In an inflationary market, well, Bitcoin and gold do well. So here we've got a smile where the least likely outcome, which is everything just returns back to kind of 1.5%, 2% GDP growth, and we all forget it's just happened. That's not going to happen. Simply not going to happen. Maybe it does, but that's the risk that we all run in the Bitcoin position. So basically, inflation, deflation of any sort, if we look at all the past episodes, whether it was 2008, 2012 in Europe, when Europe almost went under, and then periodically afterwards, the central bank kept stimulating, didn't stop. They're not going to stop here. So that to me is a good setup. Okay, so I've now got a good case. So then the case is okay. At that point, I said, right, gold, Bitcoin, those are my main bets. I own some bonds because I'm a deflationist, and I had some dollars and some other trading positions. Okay, fine. So then what changed is the charts. You know, we'd all been looking at it, that the chart of Bitcoin was this beautiful, beautiful wedge pattern, triangle pattern, and it broke. So of course, I'm a macro guy. I can see an opportunity. I can see a great chart. When I see one, I start saying, right, look, we've got to add to this. And, you know, I added obviously into the big sell-off as well, because I saw this pattern emerging. So then it breaks, I start adding. Okay, so now I'm over 50%. Reducing trading positions because I just saw that this one had the propensity to make more money than anything else. But then it got to the point where you start looking at the charts, and I started digging into the charts and writing about it in Global Macro Investor, looking at the comparisons of Bitcoin versus all other assets. And I started tweeting about this, and this is before it really started happening. I'm like, look at these charts, Bitcoin is about to eat the world, right? It looks like it's going to become the super black hole of which it's going to outperform every single asset class on earth. I've never seen this before. Literally, I've never seen it. You know, we've seen gold might be dominant, but you might have bought copper instead, blah, blah, blah. There's nothing, not even most of the Amazon and stuff like that. Looks like it's going to outperform Bitcoin. So that's when I start saying, okay, this is the time to really go for it, because it's a waste of capital to put it into anything else. Now, I'm not coming at this with the philosophy, you know, the Bitcoinization of the world or anything else. I'm coming at here as a macro guy, saying I've never seen a more dominant opportunity in my entire lifetime. And if that is the case, it's time to really back your bet. The macro environment, you rightly alluded before, almost everybody I know has a personal allocation to Bitcoin. Now, Dan Morehead was first to understand that this was going to beat all other assets. And then it sucked in, you know, one after the other on. Probably John Burbank was probably next. And then, you know, Novo, and it just starts, you know, taking people in. So, I mean, so if you think of the macro network, it's not that many people, right? So it's basically, the epicenter was probably a few firms plus Goldman. And then, you know, out of that, a bunch of traders at JP Morgan, a bunch of others came out of that. But really, it was Tiger, Soros, Tudor, More Capital, Caxton, Omega Partners, and a few others were the big macro players. And those alumni are everywhere. So Dan Morehead is ex-Tiger. I think he was ex-Goldman as well. Dan Tapiero was ex-almost all of those. You know, I was ex-Goldman, and then I was running a large hedge fund. So I was a salesman at Goldman, so I knew everybody. So I've been in the middle of the whole lot. So we all know each other. And if we don't know each other directly, we know of each other, because it's not a big universe of people, but it had tremendous influence and huge amounts of capital. You know, and it was a very exciting industry, because back in the day, these firms could have 15%, 20% volatility and have huge bets. So you'd get to hear famous people like, well, famous in our world, Nick Raditi, who was actually the big swinging dick at Soros. He lived above a store in Hampstead High Street in London, completely below the radar screen. But he was the most aggressive risk taker I've ever seen in the industry. Even Stan Druckenmiller says, you know, I think Nick killed Stan on returns, but his volatility was enormous. The size of the risk this older, very quiet guy would take was astonishing. So anyway, so that macro world had high risk taking and high returns. In came the pension funds, in came the insurance companies, in came the sovereign wealth funds. And they said, well, we don't want you to be so risky. And they're like, yeah, but you're not going to get the returns. They're like, well, we don't really care.